Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of December 9 to December 13, 2024. Let's dive into what to expect in the upcoming week. This week unfolds against a backdrop of intense global economic scrutiny and anticipation as markets pivot in response to key developments across major economies. From the Reserve Bank of Australia's rate decision amidst persistent inflation concerns, to the Bank of Canada's tough call on rate cuts amid mixed economic signals, the landscape for investors and policymakers alike is rife with uncertainty and opportunity. The Federal Reserve awaits critical CPI data to guide its rate cut decisions, while the Swiss National Bank prepares for a potential first rate cut under new leadership. These pivotal moments will shape market sentiment and central bank strategies amidst ongoing global economic uncertainties. The Reserve Bank of Australia, RBA, will kick off the central bank bonanza next week with its rate decision on Tuesday. Unlike its major peers, the RBA has not yet embarked on a rate-cutting cycle, as policymakers remain wary about inflation despite the recent decline. Governor Michelle Bullock recently stated that underlying inflation remains too high and doesn't expect it to return to target sustainably until 2026. Given this outlook, the RBA is unlikely to abandon its higher-for-longer stance anytime soon. Investors don't anticipate a rate cut before April 2025, highlighting the central bank's cautious approach amidst ongoing inflationary pressures. With inflation measures ticking up in October and the jobs market rebounding, the Bank of Canada BOC faces a challenging decision on Wednesday, despite subdued growth and business pessimism, exacerbated by U.S. President-elect Donald Trump's tariff threats. The central bank must also consider the widening yield spread with the U.S., where the Fed may soon pause its rate adjustments. Policymakers may hesitate to lower Canadian rates significantly below U.S. levels, given the Canadian dollar's 6% decline this year. As a result, the decision between a 25 BPS or 50 BPS rate cut remains finely balanced, with symmetrical risks to the loonie. The upcoming CPI report for November, due on Wednesday, is crucial for the Federal Reserve's decision-making ahead of their meeting. A significant market reaction is expected as the headline CPI is forecast to rise slightly from 2.6% to 2.7% year-on-year, with core CPI remaining steady at 3.3% unless there are unexpected increases in inflation. The Fed is likely to lean towards a rate cut, keeping the option to pause at the January meeting. This report will serve as the final key indicator influencing policymakers' actions. The Swiss National Bank is expected to cut rates again in December, marking new chairman Martin Schlegel's first major decision since taking over in October. The SNB has already trimmed rates 3 times since March and is now considering a cut of either 25 or 50 basis points. The October CPI data, which showed an annual increase of 0.7% below the expected 0.8%, has increased the likelihood of a 50 BPS cut to over 60%. Dovish comments from Schlegel, who has suggested the possibility of reintroducing negative interest rates, have further fueled expectations for a larger reduction. If the SNB opts for a 50 BPS cut on Thursday, the Swiss franc may continue its decline against the US dollar. Conversely, a 25 BPS cut could support the franc's recent recovery. This week has been marked by significant economic developments worldwide, from the Reserve Bank of Australia's cautious stance on inflation to the Bank of Canada's balancing act on rate cuts, and the Federal Reserve's anticipation of key inflation data. The global economic landscape remains dynamic and challenging. Additionally, the Swiss National Bank's potential rate cut under new leadership adds another layer of complexity. Stay informed as we continue to monitor these developments closely for their impact on markets and investors moving forward. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.